Hello everyone. Last session we have gone through the SAP sales and distribution overviews, and we told that there is some scenarios which we did not get a time to explain. So let us look into today's sessions about those scenarios. What are the SAP best practices scenarios basically for the sales process? Then we can also have a look at the system, the menu, how does it look like? Okay, so we can go to the IDES system and see what are the steps or what are the menu items which is relevant for SAP sales and distribution. So we were talk about all this content, and we have gone through these definitions, and we have discussed about the distributions, and we talk about SAP sales and distribution, then different processes involved in it, what are the sub module, we talk about it. And here we have stopped actually. Basically, what are the sales scenarios? Sales from stock, sales of non-stock items, cross-company sales, sales processing using third party, as well as sales of plant services. So let us look the first scenario, or you can say best practices, which is sales from stock. So here on the left hand side, what you're seeing, the different roles. These are the event starts, and this is customer activity, this is sales administrator, warehouse clerk, billing administrator, and account receivable accountant. Okay, so basically this starts with the customer needs to buy a product. Okay, this is the event starts. So this has some related processes. So what is this box is representing the related processes. So we have a credit management and sales quotation. So these are the optional items. So credit management, like we talk about in the submodule. So whenever a customer want or the company want to control the credits of a customer, so then we can use that credit management. Then this once the credit management is there, sales order release and those kind of things will be there. Then when this customer got an inquiry, then the company has submitted a sales quotation. So that is the relevant for this. Either it can be through a quotation or it can be a direct inquiry. So based on that, once the order confirmation is received, the sales administrator will create a sales order. Then it will go for a credit management check, right? Whether it is that sales order will go for a credit management check, whether the customer, if it's a credit sales, whether he will be able to release the order, or whether he is able to issue the items, and all those things it will check. So if credit is it is not there, then directly it will go for the order confirmation. So this is once the order confirmation is done, it means releasing the sales order. Then the warehouse clerk, when he run the delivery due list, so you will be able to see the delivery, outbound delivery created. Then it will go for the picking list, whether again it depends. For example, if you have a warehouse management or it's activated, then it will go to the picking list. Then it will check the batches. So again, what is batches and serial number is depends on the items. For example, if a product is managed by batches or it is managed by serial number, then in the delivery we need to go and select the appropriate item based on the serial number and batches. It's a part of picking. So this is again it's a part of the warehouse management or processes. So after that it will come to, he will do the post goods issue. It means you are confirming it. So once the post goods is there, then delivery note can be printed, then the customer will receive the items along with the delivery note. Then this delivery note is relevant for the billing. So billing administrator will do the billing. So this is actually the inventory. Once you do the post goods issue, the inventory gets updated in the system. So it's a document, accounting document gets generated. So the stock will reduce. So the inventory will reduce. So it happens in the parallelly in the system background. So once the administrator issue the billing, then that billing will be, or that billing invoice normally it will be sent to the customer. Then this billing will go for the, once you do the billing, then it will go for the incoming payment of account receivables. It will be reflecting. So this, and again another process is there where you can do the billing, sorry, the receiving the payment. Then this will go for sales period and closing operations. So this is again it's a settlement kind of COPA processing or controlling processing. So all these are related. So basically what happens, an order comes, then the administrator create the order, and we go for the credit check, then we release the, then order will be confirmed by the customer, then it will come for the warehouse clerk. You in the delivery due list, he will create the outbound delivery, then he will go for picking, as well as he will select the items used on batch or serial number, then he do the post goods issue. Based on that, once the item will be sent to the delivered to the customer with the delivery note, then this is the relevant for the billing. Then you will have a billing document, send it to them, then this billing will be relevant for the incoming payments. Okay, so now let us go to the next process, which is sales of non-stock items. So non-stock item means a company will not keep the item into stock. Only thing is he will buy as and when required. So based on the order, once the order he receives, then he will buy the item, the company will buy it and will sell to the customer. So it means the company who is selling these kind of items, or we can say some kind of agency sales or something like that, they never keep the item into stock, which is called non-stock item. So whenever the order gets, he will create the order, based on that when he will procure it, then he will be receiving it and delivering it to the customer. That is what is the we call it as a sales of non-stock item. So it starts, so here we have a vendor and customer, both parties are involved. So customer sends the inquiry, then the sales administrator create the sales order, then it go for the order change quantity and all those things. Again depends, right? For example, sales order will be send it to the customer, then he will confirm that this quantity is correct, and if credit check is there, it will go for the credit block, then that credit block will be released, order will be released. Then here you can see that this kind of scenario, when the order is released, that time a purchase requisition will be automatically generated in the system in the background for the items which are there in the sales order. So now the order confirmation goes, then it will come back to the delivery due list. But as you know, the items are not in stock, hence you cannot do directly delivery due list. With the item has to be procured for, because it is non-stock item. So once this PR is generated, then it will go for the purchasing manager, then who will do the quotation for procurement. So it's a sourcing activity where the PR will be converted into request for quotation, RFQ, then it will be plotted to the market, then the request quotation will be sent to the vendor will quote, then he will be chosen based on the best price, then will go for the purchasing. Though list of purchase requisition, then he will convert the purchase requisition to the purchase order. So he will create a purchase order, then purchase order will be approved. So there will be different levels of workflows to approve this. Once the purchase order is approved, then that will be sent to the vendor. Then vendor will send the item back, then warehouse clerk will receive the post goods received. Okay, so he will do the GRN, goods receipt note, then the GRN slip can be printed, then that can be kept in the stock. So once the post goods receipt is there, then this is the relevant for the vendor to submit his invoice. So you can see there is two terms, one is invoice, another one is billing. So basically from the SAP terminology, invoice means what is incoming, whereas a vendor is sending, that we call it as invoice. Billing means what we sending or selling outside, what we sending to the customer. A invoice which you are sending to the customer, we call it as a bill. Then what the invoice which is coming from the vendor, we call it as invoicing and billing. So there is a process. So that is an SAP terminology. So both the way you can see, what we normally in business we call it was our invoices, customer invoice. Another one is called vendor invoice. But this is how the SAP terminology says. So then there is the invoice when the vendor sends, then it will follow invoice receipt. Then this will go for the accounts payables. This amount will get into that. Then outgoing payments process will be relevant for this. So now the same thing, same like the stock. So you receive the item, then it is gone to the delivery due list. Then we will go for the picking. then do the post goods issue. Based on the post goods issue, it will go for the billing, then billing document will be sent. Surely here, once you do the post goods issue, there will be a delivery as well to the customer. Then this billing will be driven for the incoming payment. So this is what the SAP best practices or the for the sales of non-stock items. So here you can see that this auto requisition, purchase requisition is there. That is one thing which gets created or automatically generated during this process. Now let us look the next process, which is cross company sales. So basically cross company sales is a scenario where we have the group companies. Then one company may uh, uh, producing the items or manufacturing it, another company is selling it, then they will sell it, or you can sell it in between the company. So these kind of things are cross companies, or there will be intercompany transactions will be generated between this scenario. So here, for example, so sales need to be processed across different company codes. Okay, so this is what happening here. So daily shipment work list. So here, for example, the sales administrator of the selling company who creates the sales order, then customer, or we can say the receiving company, or if it is a to an outside customer where you are buying or taking it from your sister company where who's manufacture it. So go order confirmation, then we'll have a daily shipment work list for the inventory. So the warehouse clerk will do the picking, then from the delivery due list assign the check and buy. So this is again, it is similar to what happens in the stock sales. So it is happening from the warehouse clerk. So he will do that one, then he will go for the picking list, then again he do the post goods issue. Then here it will go to the delivery note, then as well as the bill of lading will be there. Then you can see it will go to the create billing document, then it will see the display billing document, create intercompany document, then display intercompany. So it's what happens here. So there is two company involved in it, right? So first company who creates in the order, the second company is creating the billing where there is an intercompany transaction happens here. So it means the sale is happening two levels. One is that sales document is going from first company to the second company where you do the billing. Then the customer is receiving a delivery note as well as the bill of lading. So bill of lading basically comes when you have the items are coming into it, then there is a document is called the bill of lading. So all those are relevant for this kind of processes. So basically the sales process has, like we talk about it, first is the order creation, then order confirmation, then if it is a credit release, then it will go for the picking based on the outbound delivery created, then delivery due list or outbound delivery, then you can do the pick and the items, then assign the batch serial number, then do the post goods issue. Based on the post goods issue, you will go for the billing. But here, if there is a cross company involved, then there will be intercompany documentation will get generated to it. Then another scenario is that sales processing using third party. So what happened here? We talk about a non-stock item product, right? So non-stock item is something like which you don't have in stock, but you order it for the customer, then you receive it, then you deliver it to the customer. But here in third party, what happened? A company they don't have. It is similar to what is like a non-stock item. It's a non-stock item. It automatically generates the PR. But what happens? The delivery is done by the vendor directly to the customer. So here what happens? The company who is selling it, they will not receive the goods in their stock. So directly the vendor will be send it to the item to the customer. Then they will send the invoice to the company who is selling it. Then based on that one, he will generate the billing document. So this kind of scenarios is called a third party sales. So suppose most of the cases you might have seen that some people will do this agency sales and all those things, right? So they will do directly to the customer the selling. You can see sometimes some distributor kind of things, right? They will display the product, you go and check it, then you will order it. But the company or the who is the manufacturer or who is the product owner, they will be coming and delivering the item to you. So this kind of scenario, which is we call it as a third party sales. Okay. So what happens here? Customer request for a material, then sales submitter creates a third party sales order. So it's another document type. Then it during that one any order change quantity is an optional. So it goes for the generates a purchase requisition. Then again parallelly you have a order confirmation from the customer. Okay, this is the correct one. Then this purchase requisition, you go for the uh, requisition, then you go convert to the purchase requisition into purchase orders, then approval of purchase order, then you say the ship product to third party. So basically the vendor or the distributor who will do the items to directly to the customer, then they will get the delivery note signed, then based on that one they will send the vendor invoice to that one. So here you can see there is no goods receipt happening here. So it is directly the vendor is sending the items to the customer. Then the invoice is coming, then invoice receipt, then again the vendor payment and all those things happen. And based on this invoice receipt, you generate the billing. So here you don't have a delivery note to or the post goods issue to generate the billing. Here the relevant for that one, the invoice which your vendor is sending to you, based on the invoice you generate the billing, then that bill will send it to the customer, then it will go for the incoming payment and period and closing process and all those things. So here the difference, there is no PGI or post goods issue or delivery due list, those kind of picking, packing, all those kind of things are not involved here. So this is what this is how the sales order processing using third party sales is happens. Now let us look the next process or best practice, which is called sales of planned services. So here the previous sessions we were talking about the sales of goods, right? Then there are companies who sell services also. So here how the service will be selling. So most of the times the service will be happening for some kind of customer service sales, where you provide some kind of sales service or you provide some kind of services, then you will bill to the customer for that services provided. So this is what planned services. So here customer will have a contract. Okay, so the service agent or the company who is selling the service will have it's a customer contract. Then you create a plan for that one, maintenance plan. Then you schedule the maintenance plan. So it's like, for example, you need have a regular maintenance for your air conditioner, suppose. Then what happen? You will have a contract for that one. So we call it as AMC, right? Annual maintenance contract. Then based on that annual maintenance contract, you create the schedule. Then you plan the schedule. Then you have the schedule view. Then you can have the service order created based on that one. Then for that service order you create a service entry sheet. Then you approve the service entry sheet, then close the service order, technical completion, create billing request based on that one. So here, so you have a service order, then that service order will go for a service entry sheet, then you approve the service entry, then based on that one you create a billing request. So instead of a sales order, we call it as a billing request. Then based on that billing request, directly go for the billing document. So here again the service entry, it can be sometimes you will be getting the services from outside as well. So where you need to have that service to be taken from a third party. So then there will be a service entry sheet and service confirmations will be there. Then that cost also will accumulated to your service order. Then that service order is the overall cost will be the relevant for your billing request. Then that billing request will go for the billing document. So this is the scenario or the processes which follows for the planned services. So we talk about the different services. Now let us look at the system. What are the things which we are using it? So let me just go in a recap. So we talk about Sales from stock, sales of non-stock items, cross-company sales, sales process using third party, and sales of planned services. So let me just show you this uh, systems. So what are the menu and all those things, just for to understand from a system perspective. So the sales and distribution module comes under logistics. So this is the under logistics, sales and distribution will be there. Then under sales and distribution, this is what we talk about with different submodule. One was the master data. So under master data, we have different master data are there, business partner. So here under business partner, we have sales prospect, then customer. So there is a difference between sales prospect and customer. So sales prospect means sometimes it will convert it to customer, or it can be a customer. So what happens here, sales prospect means there won't be any accounting details will not be there, or billing informations will not be there. So it will be have only the general data of the customer, so which we call it as a sales prospect. So basically in SAP we have the option, you can create a sales prospect, and then as prospect you can convert into customer. Again, different accounting groups, so this accounting group changes and those kind of things are there. Anyway, I'm not going into that process level, the transaction level. So these are the different partners, sales personnel, competitors, customer hierarchy nodes, sales partners, contact person. All these are considered as a business partner. Then we have products, so material, item proposal, material determination, cross-selling. So these are the different items in part of the master data. Then we have conditions, right? The pricing conditions and all those things. So here the transaction code, if you want to see it, I will go settings, then I will say display technical names, so you will be able to see that transaction codes. So I will go here, sales and distribution, then master data, which we are talking about, then we have the conditions. So these are the things which the transaction code where we can create the conditions. Then again we have the condition. Next is the output. So different output we can define. How do you want to take the printouts, or basically the form printouts? Then here again master data, these are the agreements. We can create contract, rebate agreements, or sales deal, scheduling agreement. All those things will come here. Okay, then here we have other routes, incoterms, terms of payment, some other details as master data. Then this is the information system for master data. You can see the lists based on this. So basically these are the reports. Then under that, then this is the sales support. Most of the time people will not using it. As I said in the previous sessions, it is basically we use the CRM functionality for this. So here we have the sales promotions. These are the marketing kind of activities where you can have the campaign created and all those kind of details. You can see the create direct mailing, all those things is possible. Then we have the address list. We can create the address list of the customers or the mailing customers. Then this is the text, you can create it, and all those things are there. Then this is the sales activities. We call it as the, we can have different type of activities. What are the type of whether what is the activity or interactions, we call it in CRM interactions. What are the type of interactions you are happening, telephone call, sales letter, sales call. So these kind of things also you can record it in the system. Then based on that one we have the analysis, then information system, archiving the document, all those things are there. So this is the sales deal report or sales support activities we have. Then here these are the indirect sales processes. Then this is the sales processes where we have inquiry, quotation, order, scheduling agreement, contract, back orders, product cost by sales order, service based availability check, and information, and all those things are there. So these are the sales related. So most of the time people use these things only. Sales support and all are not done, but these are available. Then this is the shipping area where we can create outbound delivery, picking, packing, loading, shipment, ports, goods issue. All those things comes under the shipping and transportation. Then we have the scheduling workbench, and all those things are available. Then empties management. So these are industry specific. Sometimes you send the some product we use, you send it with a packing material or some kind of containers to the customer, then you deliver the goods and return back the empties. So those kind of scenarios also. So sales and distribution, basically it's able to handle all those scenarios, and this is what we are talking about, the credit management, exceptions, items. So this is also available in the system. Then this is, we talk about the foreign trades. Again, this has different declarations, general foreign trade processing, prohibitions, restrictions, payment guarantee. So these are related to the activities which is specific to foreign trade and customs handling, because surely when you send your goods or sell it to outside, there will be customs involved. Then similarly we have sales information system. So we have standard analysis, flexible analysis. So these are the things is as part of sales and distributions. Hopefully we will talk about this in our coming sessions. So hope you got an idea what are the things available in sales and distribution. This is an overview sessions to give you some idea what are the processes, how it happens. So we can have a deep dive and look into it in the coming sections. So thank you for watching. So please subscribe to us and stay with us for more videos. Thank you. Bye bye.